Afternoon, gang. Okay, I didn't plan on an afternoon video, but seeing as how I'm kind of chair-bound today and Mrs. P is out doing some of our planting for us, thank God. uh, yeah, try to stand up for a few minutes, I get dizzy. Gives me a chance to see what's going on. And in case anybody has paid attention to what's going on in the stock market, the investing world today, Wall Street, whatever you want to call it, the banks are getting hammered. Uh, Primarily the regional banks. You know, you're seeing some of the cast of characters that we know that are uh, somewhat in trouble. The ones we've talked about many times. Yep, they're in trouble again. You know, it's First Republic has now fallen by the wayside. Who's next is the question. I don't care what Jaime Dimon says or what Janet Yellen says. Oh, everything's okay. They're not going to come out on, just understand this. They're not going to come out and say, the banking system's FUBAR, get your money out now. Of course they're not going to say that. They'll tell you everything's okay while they're locking the door. All right? This is just stuff to pay attention to. Now, if you remember a week or so back, I was talking about the commercial real estate market and to watch what's going on in the commercial real estate market because that's going to dictate what's going on to the banks. And sure enough, now it's starting to come out that those banks that have high exposure to the commercial real estate market, remember we telling you it's like Chicago has 1/3 of the commercial real estate properties are vacant. Yes, I know. All right. So this is what you're looking at. Pay attention to what's going on. How is your bank putting your money to work? Okay, and what kind of risk are they taking? I want you to look at this chart real quick. Okay, now if you look at this, this is the commercial real estate disclosures by banks. This is the ones that have come out and said this is how we have our money invested. The top, what, 10 there, 9 there, those are basically your bigger banks. I mean, you know, Bank of America, JP Morgan, uh, what's in PNC's in there, USB, Wells Fargo, yada, yada, yada. Okay. There's a couple of them that have 10% exposure. That's not terrible. If you look down on the bottom, the ones that are in the brownish yellow, whatever you want to call that color, start looking at those numbers on the right-hand side, okay? When you're looking at New York Community Bank has 70% of their money invested in commercial real estate. When Bank of the Ozarks has 60%. Uh, when Valley National Bank has 56%. Uh, East West Bank has 32%. That's where it starts getting scary when you think of how much exposure they have to a market that is dwindling like crazy because work from home, work from home, work from home, layoffs, layoffs, layoffs. Like I've said to you guys before, the number one expense for any company is their employees. The number two expense for any company is their building, okay, whether it's the plant or the office space or whatever it is. And this is the problem they get. You're laying off people. That's the cost cutting measure. The next thing, you lay off people and you close branches. What did I talk about this morning about banks closing branches? This is where we're going, guys. You know, if you've got money in any of these banks that are on the left-hand column here, you know, it might be time to start moving some of that money out. I mean, if you take a look at just some of the banks that are going on today, Pacific West Bancorp, I've talked about them before. They were down nearly 30% this morning. Western Alliance Bank, we've talked about them before. They were down 21%. Key Bank, there's a new player. Key Bank was down 10% this morning. You know, you're talking all the moderate sized banks, the mid sized banks, most of them are down 25 to 50% year to date. Guys, it's the beginning of May, okay? You start looking at the problems these banks are having, and it's all the same. They're all stuck with these treasuries that when the treasury has raised rates, the value of those bonds goes down, and when there's any sort of bank run, when people start taking money out, like I've talked to you before, like I did the video in the car the other day, you know, you take out 10 people with their $1,000, no big deal. 20 people, now you have a problem. When banks start getting into a liquidity crisis, this is what happens. And of course, you have JP Morgan coming in and bailing out First Republic. Remember, if you go back to 2007, 2008, who bailed out, what was it, Bear Stearns, and who was the other one? Crap, I can't think of it. It was JP Morgan again. Remember what we've talked about who the big players that supposedly are going to be left. JP Morgan and Bank of America, if there's only two. If there's six, JP Morgan and Bank of America, and that's six too. Just be watching this. They're not going to tell you that everything is falling apart, okay? Certainly not. Nobody's ever going to say something like that because that would cause a bank run. So they're going to tell you everything is good up until the moment they go, click, sorry, and there's a sign on the front door that says, under receivership of the FDIC. That's what you're looking at. You got to pay attention to this stuff, guys. I know it sucks, but, and it gets very wonky, if you will, to use the term. Market's actually trying to come back a little bit. It's only down $470 or 470 points today. But again, if you want to take a look at something, how other things are performing, gold's up 1.75%, silver's up 1.5%. Okay, they're back up to where they were a week or so ago, 2 weeks ago, after all the sell-off. They've recovered everything here in a couple of days. This is the thing. You're seeing a flight to safety, and that's exactly what it's called in the market, too, is a flight to safety. That investors are going, I don't like this picture. This doesn't sound good. The Fed is going to have their meeting here on Thursday, and chances are they're going to raise 25 basis points again, which is going to put further stress on the banks. And if Jerome Powell doesn't indicate that he's done raising rates, then the market's going to be freaking out saying, okay, is he going to do another one, and where do we go from here? This is the issue, guys. There's regardless of whether you're talking about CBDC and all that sort of crazy stuff, you got to plan for what's first, and that they've got to collapse this economy before they can build back better. That bullshit line. Before they can build something else. You've got to prep yourself for the collapse of this one, and then we can deal with how to walk through, how to navigate the new one. But right now, you got to do whatever you can to protect yourself. That's getting out of debt. That's putting your money into hard assets. Prepaying stuff if you can, whether it's your taxes, your phone bill, your electric bill, whatever it would be. Putting your money to work somehow before it's worthless. Not trying to be gloom and doom, guys. This is just reading the tea leaves in the market. And the beat goes on. Pinball out.